You've been fed this rule that buy and hold is going to make you rich in like 100 years or something. Is that actually true, though? We want to look at the numbers here today and dive deeper into that. Is index investing still viable? Is stock selecting better? What we are buying right now, what actual trades we're doing. And before I get going, I want to give you some real educational value here. I made a whole document for you. It walks through how I select stocks, how, in my view, the greatest investors out there select stocks. It's completely free of charge. Download it at felixschwenzer.com/great, as in great stock picking, great returns. That's the idea. Not courses in financial advice. Yeah, I used to be a banker, but that doesn't mean that this is necessarily the be-all end-all. It's my opinion. Take it for what you wish and let me know down below in the comments if you violently disagree with me. I like a good argument. Who doesn't? So Felix here, let's get cracking. I'm going to share my screen with you here. And this chap here, Puru Saxena, one of my Twitter friends, he says the risk-adjusted performance of buy and hold is poor. He says during the QE era, the money printing era, hundreds of stocks such as PayPal, Roku, Square, Zoom, and so on, went up hundreds of percent before declining 80 or 19%. Profits are retained by selling during stage 3. You might be thinking, where is stage 3 and how do I get a pass? Well, let me show you. There is a theory out there called stage analysis, and this is what killed fundamental stock trading in the 70s. There is a guy called Weinstein who came up with that, no relation to the one who commits crimes against houseplants. So very, very upstanding member, and then he's written a book which is a good read, but I think you can get a summary of this quicker online. And essentially what it says is there is a stage 1 where we go sideways. There is a stage 2 where things go to the moon. There's a stage 3 where not a lot happens. There is stage 4 where people start crying and blaming other people. And then we go back to stage 1 down here. So the smart thing to do, of course, is to buy at the beginning of stage 1 and sell somewhere up here. That's the smart thing. That's all he's saying. And you can't really dispute that. That is actually true. That is how the greatest, more active investors and traders make their money, me included. Now, you might be thinking, but Felix, I have heard that people are terrible at stock picking and it's much, much better to buy the S&P. Well, what about the S&P? Do you think the S&P is buy and hold investing? It's not. The S&P 500 is an index. There are funds that track the index that kicks out 15% of its companies. Sorry, the lifespan of companies in the S&P 500 is 15 years. So every 15 years, you get a turnover. Why is that? Because, well, every year they replace 25 companies. 25 a year. That is 5% per year. And therefore, this is an actively managed fund. It's just you're not actively managing it. You're buying the index, but it's still actively managed. If it wasn't, it'd be losing you a heck of a lot of money. So they kick out the 25 crappy companies, they replace it with 25 new companies. And this has been getting faster and faster and faster. In the 1970s, 60s, you could have, companies were in there for 30 years plus. Now it's only 15. Why is it only 15? Innovation, technological disruption. It's getting faster and faster. And therefore, holding on to those 500 companies would be pretty stupid. So the S&P 500 is actively managed. Now, is it therefore still better to just buy an ETF like, SPY or VOO or any of those that track the S&P 500? Should we buy an index fund? Well, you should buy an index fund if you are new to investing. This is my opinion, right? Or if you want average returns. And you might think, I want average returns. Average returns are great. Average returns are 8, 9, 10, 12%. But then you get an average life. you get an average level of wealth. You get an average experience through this life. So I don't want average. For me, average is terrible. Now, is it better than not investing? Oh yeah, it's a mile better than not. If you're not investing, you lose like somewhere like 7 to 10, probably 10% a year you lose wealth compared to people who were invested. So you become massively poorer over like 5 or 10 years, right? You're basically, for all intents and purposes, living in a cardboard box under a bridge, hopefully not in Baltimore. So no question about it. Not investing versus index investing. Index investing wins by a million miles. But index investing, whereas a good stock picker, the stock picker wins, right? Now, why are not many people good at stock picking? Because they don't know what the heck to look at. So you got to learn the secrets to selecting stocks. And it's really not a secret. It's a bunch of things. I'm not going to run you through the whole thing because I've done a whole video on it. I'll link to it at the end. But download the guide document on it, felixfranz.org/great. Use that, watch the video I linked to at the end, and then you'll know what great fund managers know. Do you want to know what we're buying right now? Because that will be the next question, isn't it? Well, are your ideas actually any good? Well, you can judge for yourself. So we put out a newsletter called Trading Floor Whispers because it's written by a former market maker, one of my team, and it's very funny. And you can get your pause on it again as a free trial, felixfranz.org/sub, because it's a Substack. felixfranz.org/sub, S-U-B. And I'm not going to run you through all the rationale here, which we do for why we do what we do. But one thing we're liking at the moment is Tesla. We're liking it because it's come down a lot. It's sort of capitulated. It's basically in that zone 1. We're kind of thinking it might soon be going into stage 2, which is the one that goes up, right? Stage 1, stage 2. It's held our key support. And we walk you through how we do that trade. We walk you through buying Tesla isn't stressful at all. No, so you need to have some rules around it. You need to have some stop losses. You need to have some rules. We walk you through those. If you want to get something into something even more stressful, crypto, yeah, I think there is still money to be made with it. There's a trade idea on Polkadot. We also warn you that crypto is a casino, so you might want to stay away from it, but we walk you through it nevertheless. And then there is Intel and AMD. They've both been banned from Chinese government servers. Both stocks went down like 3.5% and 4%. And we think that might be overdone. We still think the AI bubble is alive and heart beating. So we actually quite like it for that reason. And again, what we do is we set up a trade on that with particularly tight stop losses. And we walk you through all of that so you know exactly what the trade looks like. And another one that in my view is going to benefit from all of this madness and lower interest rates is ARK. And I've never owned ARK in my life, but I think if you ever wanted to own ARK, this is probably a good moment because it's been beaten up a great deal. And this is the moment when interest rates come down. That is when things like ARK come back to life. So it could be an interesting thing to do. Again, you could buy it, you could put up a trade on it and so on. And we tell you what we wait for and what we then set up and how we set that up and everything else. So it might be a little bit too detailed if you're brand new to this, but yeah, it's in depth. I grant you that. But if you want in depth, if you want some real explanation, some real trade walkthroughs, get your pause on it at felixfranz.org/sub. I'll link to it down below as well. So in my view, in summary, if you are thinking about investing or you're not investing, you're sitting on cash, yeah, for crying out loud, buy a bleeding index ETF. But if you want to actually have an extraordinary life, you need to learn a bit more. It makes no sense to spend your entire life working for money and then not set that money to work. It just doesn't make any sense. So please just do at least the one thing. Read the document, felixfranz.org/great, and ask me questions. You have questions on it, put them down below in the comments. I shall read them. I shall reply you. And I love you for watching. If you enjoyed this video, do share it. And I hope to see you on the next one. Thanks. So they go out, they spend, they pay for their mortgage or their rent and their car insurance and all their other obligations and enjoy themselves and go on holiday and pay for their children and their Labradors and that sort of thing. And then whatever is left at the end of the month, they go and invest it. What do the 1%